Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Friday, December the 11th, the year's 2020. Let's talk trading. It is time for the weekly wrap up. And these videos are for educational purposes only. Your results may differ from mine. So let's jump right into the week. And as we can see, it looks like all the gaps filled. I hope some of you took advantage of that. And when we look at the close to the weekly open, we can see hundreds of pips that could have been made on some of these pairs just trading off of that weekly open. Once again, simple horizontal lines. And taking the breakout on the pound dollar, you see right now we're 72 pips below that low. And there was a lot more pips because we're 82 pips above it. So that's 154 pip possibility on that simple trade. Notice we did take out the pivot, the weekly pivot. Very interesting setup here. When we look at the opening range, you can see we had the opening range for the month. And just today we dipped into it and we fell out of it, showing once again there was a nice trade there. On the weekly range right here, we started inside, we broke below that, the opening day for the week here. And as you can see, for the opening day for the year, we broke into it and we're right now right here in the middle of it. And so it's possible sometime next week we might break out of that again. So just another set of simple horizontal line trades. And those of you, I know somebody's going to want to ask the question, so let's just get it out of the way right now. You're going to ask me, where do I place my stop? Stop loss is a function of your risk and your position size. Your risk, that's how much you're willing to lose on a trade. Now, what happens is in many systems, they go, well, here's your entry, and then they pinpoint where the stop is. And in one case, on the same method, the stop might be 20 pips away, and in another instance, it might only be 10 pips away, and in another instance, it might be 5 pips away. Well, if you want to keep your risk the same and never exceed it, then you adjust your position size. Okay, because if the stop loss is the same and the risk is the same, I'm sorry, if the stop loss is changing and the risk is the same, well, then the position size changes. So right here, if the risk is the same and your stop loss changes, where you place that stop, your position size is going to change. It's just a simple function. So that way, when you want to know, well, where do I put my stop? Well, if your method tells you where to put the stop, then you change your position size. But if you want to keep your position size the same and you keep your risk the same, then your stop loss is always going to be the same distance from your entry. Once again, this is just simple math, but a lot of times people try to get a little complex. They want to sound educated or smart or something to other traders. So they go into these really long explanations about where you put your stop when it really is simple. So in these cases, if you wanted to put your stop on the other side of the range, you're going to have some small position sizes. If you're just going to have your 10 pip, 20 pip stop, well, then you know what your position size is. And the worst thing that can happen is you lose that trade, that amount that you were willing to lose. Okay, notice we crossed below the yearly open today. Right here, 34 pips. Once again, simple horizontal line trade. You can see yesterday, looks like we stopped right on it. So, having these numbers available, knowing these numbers, and you can set up an alert, put it down on a post-it note, use the TRO My Notes indicator, have it on your screen. use the indicators, but that way you can take some of these opportunities that come up during the trading day. Inside bar, we had one on the pound 3 days ago. We broke out of it here. We broke out of it the day after, and then the day after again. So simple horizontal line trades inside bars, profitable. Notice we actually dipped into the monthly inside bar here. We came above it, right now 37 pips above it. Another simple horizontal line. And you can see each one of these charts is just horizontal lines. Yeah, I've got the dashboard over here, but that's just if you want to trade multiple pairs and not have to look at multiple charts to see when the opportunities come up. But for the most part, there you have it, simple horizontal line trade. Nice movement on the pound pairs here. All of them are over 100 pips, including the euro pound. You can see we had a couple other pairs moving nicely. And pivot point faders, buy zone traders, you can see the pivot was above the buy zone. So if you took that bias, you hit some pips. You just after the bias, after it gets taken out, then that's off. You trade what you see. And right here you can see you got a short trigger. If you put your stop here, maybe you wait for the candle to close above this, the D1, or you got stopped out. Otherwise, you had an opportunity and there was lots of pips to be made. You rat traders, green rats, feasted. Unfortunately, I was horizontal at the time. I didn't get a chance to get into that trade because, as you can see here, this rat zone was the 3140 level, which I call the launching pad for the pound. It came into the launching pad and it launched. I mean, there was a 100 pip launch there. Hopefully, somebody out there took that trade. Notice this is the weekly and the monthly lower rat zone. So, having this indication once again can help you knowing where price is for the week and for the month. Making those lows, it usually retraces off of those lows. I mean, the range today is huge. You can see we took out that monthly pivot. I think I called that way back here, looking to hit that monthly pivot. Monthly pivot got taken out. And so it's like, when would you want to trade the monthly pivot? Well, the weekly was up here. So anytime you can, and let's see, where was the weekly open? Weekly open was right here. So anytime price shoots towards the monthly pivot, that's when you put the trade on. Now you say, well, look, it came all the way back up here. Well, you have to protect your profit. I think Walmart and I talked about that this entire week about protecting capital. And when you're in profit, that's your capital so long as you protect it. So, I mean, just simply looking here at the H4, you can see price came down, put in a wick, came back down, exited that wick zone. Just take your profit off there. I mean, really, if you had entered here, that was a nice profit. You gave back some pips, but or if you drop down to H1, maybe you even gave back less pips. Point being, protect your capital. Then you can see here, it came back above the weekly open, gave you another couple more opportunities to get short, heading toward the pivot. And once again, there was opportunities. You can see here on the daily, we took out the pivot today. On the weekly, that was taken out. And as I mentioned a couple of times, we took out the monthly pivot. Oh, and I know somebody's going to want to know, what's the indicators? You see there's just a few. And as far as the mid dots, we have everything false except for show pivot. And those mid dots are from, you take the high, the low, divide it by 2, gets the mid. For the pivot, it's high plus low plus close. Add them together, divide by 3. Wick zone, in and out, back in, back out, back in, back out. Looking at the ranges, monthly 405 in the 26th percentile over the last 100 months. Monthly range, high previous high, there's a 141 pip breakout. You can see we haven't broken out of the low. Range high to close, 314. So you rat traders, there's your nice pullback. And here, close the low, 91. Once again, rat traders, there's your pullback. Money to be made off of these simple trades. You just have to be patient, wait for your triggers. And I know there's still people struggling with the rat zone. I'm telling you, if you're trying to trade anything, if you're struggling and you're trying to trade anything below H1, then just switch to H1. Okay, you're going to have to wait maybe an hour or maybe 2 hours or maybe 3 or maybe 4 to get your signal. But then if you're in profit, it can be worth the wait. There's no sense in trading against, the H1 candle color, because usually that's when you get your fingers burned. Yeah, and it can turn against you. That's true. That's why you have your stop loss in place. But if you're getting stopped out on rat trades more often than not, then most likely you need to move up to the H1 time frame or H4 time frame, trade with the candle color, or you're not taking your 5-10 pip profits when they present themselves and you're letting price reverse against you. So you need to figure out which one of those, if not both, you're doing. On the daily range here for the pound, 190 pips, 91 percentile. It shot out of the ATR zone. High minus close right here, 100 pips. Close low, 89. So once again, nice pullbacks for rats. Here we go. Open to the high or high minus open, 36 pips. Buy zone traders rewarded. Open low, 154 pips. Once again, buy zone traders rewarded. Simple horizontal line trades. You just have to trade what you see. Make sure your stops are in place. Okay, we talked about ATR. We're in the daily right here. You can see here's the daily low. We were in the range, and then it came out of that range. Once again, in that 40 to 49 launching pad, came down, shot out. This is at the H4. Look at the H1. Would have been trading against the H1 candle color, but that's one of those ones I'll take that risk. It hit 30, crossed 40, could have easily jumped in. And as you can see here, it broke that D1 previous day's low, tried to close above it here, failed. Once again, look for those types of setups. And the simplest of all horizontal line trades on the sweet spots, gold. What can I say that I haven't already said? So, fellow traders, I really hope you had a profitable day and week and you're having a profitable month. Hope you have a fun and safe weekend. And when you come back and sit in front of your trading platform, always remember, never forget, it's not what you trade, it's how you trade it. So get out there and drain the banks. TheRumpledOne over and out.